Are payment banks a failed experiment of RBI? What exactly is payment banks? What are the major features of payment banks? First, they can accept deposit only up to 2 lakh rupees. Above that has to be swept out to some other bank or somewhere else. Second, they cannot give credit. Third, they can provide remittances facility, mutual fund and insurance being the distributory function. They can appoint banking correspondents or business correspondents, and they themselves can be BCs or business correspondents. They also come under the Banking Regulation Act, Payment Systems and Settlements Act, and because they have AD2 license for remittances, overseas licenses, that is why they also come under FEMA. Why do I call it a failure or a failed experiment? RBI came out with the guidelines for payment banks in the year 2014. Applications were invited, 41 people applied, 11 of them got a license to start a payment bank. 3 of them surrendered the license saying that it doesn't seem to be working out. Another 2 are considered as defunct. So out of 11, 5 gone already, 6 are supposed to be in operation. I looked at the RBI website, I could see only 4 listed. All the 6 should have been there, only 4 are there. Anyways, whether it's 6 or whether it's 4. First of all, what was the thought process behind having payment banks? So I remember years back, some senior person mentioning that the cost of opening an account for a bank itself is around 2400 rupees. You know, you take the KYC documents, I include the cost of the employee who is processing the documents, the backend who enters the data for the new account opened, then the printing cost of the checkbook and the ATM card printing cost and all the paraphernalia that goes whenever we open a bank account. It may have decreased now because of more digitization happening or more technology being employed for opening an account. Generally, banks do not earn if you keep money in the bank account. Bank earns the money that you have, they are further given on credit. And that's the biggest problem with the payment banks. So payment banks, they came out with the concept that they could not give credit. They could accept deposits. Payment banks were supposed to earn money on these transactions. That every time somebody does some transaction, they will earn money because the money that they collected from the people, their 75% of those deposits had to be invested in securities, government securities, approved government securities, which contributed to SLR. Also, the amount they collected, they had to meet the CRR, cash reserve ratio requirements of RBI, which they earned no interest. Another big hit for the payment banks was in 2018. RBI allowed PPI, that is prepayment instruments, to transfer funds between, if you have a wallet, transfer fund from one wallet to another, or transfer money from your wallet to your bank account. In spite of that, whatever I have studied, the largest payment bank about which I was very hopeful is the India Post. India Post has more than 1 lakh branches. India Post Office is there in every nook and corner of our country. They were not allowed to give credit, but they could have used their distribution network and the fact that people trust them for distribution of other financial services. I wonder why this has not happened. Plus, they could also business correspondents for other banks, which again could have made sense, but somehow things are not fitting up there. Watch this space for more. We'll keep chatting and we'll keep updating you regarding what's happening in the payment bank space. Hope you like it. Please do not forget to subscribe. Bye.